Welcome back, and our experts are still with us discussing on where you should be putting gold or your money in gold avenues. Lakshmi, I want to start with you onto this one. While you, of course, have given a thumbs up on the gold bonds, on the kind of performance and the money allocation that we have seen there, what is your sense on the kind of returns that we can expect as we go forward? I mean, our gentlemen also have picked up silver rather than gold when it comes to precious metals. What is your own sense on that?
So again, as I mentioned, if you see, barring the last quarter or maybe last 4-5 months, gold has had a very, very bad innings, right, from all the way from 1 year all the way up to 5 years, give or take a few percentage here or there. So I think from that perspective, if you see a law of average catching up, and also the fact that typically, as is good with any asset class, you see a prolonged period of a bear phase or depressed returns tend to catch up from an average perspective, and that is what we started seeing in the last quarter or so. Our sense is that probably that winning streak could continue going into the future, especially given the fact that US has visibly mellowed its stance from an aggressive rate hike perspective to a largely normalization kind of a spree. But to expect euphoric returns from gold as an asset class to our mind seems counterintuitive, especially at a time where we are talking about a seemingly booming economy, and which translates into risk asset classes like equities as a first port of call. So if I were to give you a number perspective, maybe next 1 to 3 years, if you are expecting reasonably good inflation adjusted returns from equity as an asset class, I think gold would just provide that stability factor, with maybe some tactical pullbacks happening in the very, very near term, or some kind of a dead cat bounce kind of a thing. But on a sustained basis, to expect meaningful high returns from gold, I think may not be desirable right now.
But would you want to put out a number, Lakshmi? I mean, do you see 1,300 coming this year? Would you say that 10 to 15% of portfolio can be put in gold?
Maybe not 10 to 15%, but yes, 5 to 10% purely as a risk cover on your financial portfolio, given that complacencies in risk asset classes have built up super high and volatilities are at all-time lows. So probably to that extent, some bit of allocation can be considered, but not as a core allocation to the portfolio. It's more as a fringe allocation, probably as a last man standing. In terms of returns, as I said, even last 1 year has been negative of 10%. So even if we give back that and get back to those kind of tolerable numbers, I think we should be good. So to that extent, achieving a 1,300 number does not seem extremely impossible.
All right. Jonathan, coming to you as well. I mean, you mentioned earlier that 1260 is quite doable by this month end, but for a longer term, will the strength continue? What is the number that you're putting out?
Look, I think so. You have to look at, obviously, the macro economy at large. You have to look at where that price pressure is coming from, and those political instabilities, those concerns that we have. Remember, there are quite a few hotspots still in the world. We might see some safe haven coming in from that level. But the way I'm starting to read things, price pressure to the top side, we'll see that inflation hedge starting to wear in, and I think that store of value for gold will come. So let's see if the economies do pick up, unemployment goes down, inflation and price pressure pick up, then people will naturally move to the metal, and that's what I'm counting on.
Well, of course, there are lots of moving pieces and uncertainties around that, and that's perhaps just what exactly is gold looking at, and that's the reason we've seen those gains come in. But Adrian, coming to you as well, how much of a portfolio allocation would you want to make for gold, and what kind of returns would you see here?
Well, I mean, I think, kind of a 10% holding in gold across a portfolio, otherwise split in equities and bonds and real estate. I think that, I mean, certainly for our customers on Bullion Vault, that tends to be around, the kind of middle mark of what people hold. And that's performed very well during financial crises. If you view gold as insurance, which is how I personally see it, for other assets, then you would expect it to not perform very well if you're seeing strong returns in equities and strong returns from, real strong interest rates on bonds and so on. Against that, that's the price that you pay for the insurance option on gold, which is, as we saw in 2008 through 2012, with equities now priced where they are, there's a growing concern, and increasingly when I talk to money managers here in London, a lot of people think that the US market is very overstretched. The US equity market is very expensive by any historic measure now. European equities also, if you exclude the utilities and the boring stocks, actually valuations are looking rather rich. but no one's doing anything about it yet. You know, we've seen the big US gold ETF, the GLD, has actually shrunk over the last week of rising prices. This is very unusual behavior in the GLD. The GLD normally moves in lockstep with gold prices. So I think at the moment, you know, everyone's worried about the risk of some near-term correction or possibly, you know, a hard drop in equity prices, but no one's doing anything about it. So back to Jonathan's earlier point, I think what's interesting at the moment is that, you know, if you are looking at gold as a longer-term insurance play, now might be a good time to get in because fewer people are interested at the moment.
Well, remember, we're telling you that exactly on how it's overstretched, overvalued, and gold perhaps is like the right time to get in here. But Chirag, you know, there's a lot of moving pieces in Indian markets as well. We perhaps are waiting for the gold policy in India. The draft policy is expected to be ready as of now. Spot exchange is something that we might see first. So the whole buying, selling, distribution, warehousing, delivery, all of that in India might as well change. Are Indians prepared for that? Do you think that could be yet another thing that could lead to a bit of a dent in buying yet again?
I think there are two things to look at it. You know, let's look at something from a near-term perspective. We've had GST, which is one of the largest reforms that has happened. So there is going to be a near-term disruption, which is, you know, happening in the market. You speak with jewelers, you speak with bullion dealers, and they would say that the business has gone quiet. So that is already something which is happening. You know, having said that, I think it is an exciting time to be in the Indian market. You know, honestly, you know, as you mentioned, there is something happening on the spot exchange. There is something happening on the comprehensive policy side. I think all these things could lead to a near-term disruption till the time people understand. But overall, if you look at long-term, I think it will make Indian business more transparent. It will help, you know, Indian businesses to actually prosper. So I would, you know, in fact, look at it this from a purely positive perspective, from a long-term you know, angle. I think these things will actually help clean Indian businesses. For many years, it's been said that gold business often is largely cash-driven. There's a lot of unaccounted money which flows into this. I think all these steps that the government is taking are extremely positive for gold business as well as gold demand.
Yeah, might take some long time, but of course, the sector by the time comes out of it would be a much stronger one. Adrian, this one is to you. How important would you say in a global scenario is the Indian physical demand really seen as? Because for many years, this has been a very, very strong factor or a fundamental. How important is it even now?
Well, at the risk of being rude, the problem with Indian demand is that it's consumer demand in the large part. So when gold prices fall, Indian households tend to buy on the dips. It's a very smart policy. It's a great strategy, and it's worked very well for a very long time. Really, in terms of pushing prices higher, it is institutional investment demand, larger money managers, private wealth in particular. It's something we haven't seen. You know, private wealth came flooding into the gold market in 2009 after the crash had begun. You know, really when the equity market had already hit its lows. That money exited in 2013. We could all see that in the price. You saw it in the GLD. You saw it in the outflows from London storage, from London vaults, exported out to China, and now the #1 consumer, and of course India. Yeah. So, you know, Indian demand, Asian demand more broadly, has tended to help put a floor under the price.
If not so much more than that.
Indian household demand, Chinese, it won't push it up. I mean, that's because Indian households are too clever. They won't buy it on a rising price, they'll sell it.
I just want to have a quick last 30-second comment from Lakshmi as well. Lakshmi, it isn't always about the ETFs or the bonds or physical buying. Sometimes it's about buying into the gold stocks as well. The jewelry companies have done, you know, enormously well in last couple of quarters. Do you think that's yet another avenue where people look at gold but would rather buy the company?
Very limited pure play gold providing companies in India. At best, you have some gold finished products companies in the form of jewelry companies, but the universe is very small. So I don't think that can really be a universe. The gold fund of fund which invests in gold mining stocks probably could be one avenue which is linked to equity prices worldwide as also with gold prices. So apart from gold, from a diversification perspective and a currency perspective, that's another avenue which investors could definitely consider at an opportune time.
Your point is well taken, Lakshmi. Adrian, Jonathan, as well as Chirag, thank you so much for joining us for this discussion today. Well, it's perhaps the right time to buy gold, as the global markets are indicating. As an investment or a portfolio diversification is a choice that you will need to make. But with that, completely out of time on this edition of Commodity Champions. Thank you for watching.